11/30/2011. S&P 500 60-minute chart. We've been open for 45 minutes. The call options that we own are up 7.45. 1,750 contracts. People are buying way above us. And it was our upside 1265 call that we had to be in and that we had featured very clearly and very clearly. Is that the put side over here, which is getting marked down, as MMT David knows, we had to come out of these at $10 and they're down to 440 by 570. Why is all of this happening? Why is all of this happening? Because it's headline news volatility, and Ben Bernanke and worldwide banks are all going to work together and give the system all of this capital infusion to save what? Extreme contagion in the euro. Because if it does break down, it will send these markets and indexes down to lows that people have not seen since the original financial crisis, I can tell you. But once again, when it comes to trade management, you have to know how to adjust the volatility. And by having up and out of the money 1265 calls just for this announcement that we had forecasted very clearly, that they all had to get together, they all had to come together, they all had to meet at the same place with the same announcement, and that would re-leverage up worldwide assets. However, because the S&P 500 is 20% weighted to Europe's earnings or growth, and if the financial system would lock up, which if they wouldn't all tarp up at one time, and if you don't know what TARP is, go look it up in Google, T-A-R-P. TARP it up. TARP it up worldwide. Does it matter if it lasts or not? Who cares? We understand volatility, risk management procedures on upside bull volatility versus downside bear volatility. Let it be known that the 60-minute chart is, you're right up here at this key level, this 1230 level. The S&P super gap is right here. We're up 37.96 handles. That 60-minute bar starts here, and you can see that 60-minute breakout bar up to that 200-minute moving average. You can go right over here to this trend line, which is going to be the near-term resistance level, where when we were up here, up around that 1260 handle, right up here where that major reversal short that we had to do was going to fail from the original rally that we have talked about very clearly. We would like you to know how to trade volatility. And volatility means that they've come up with a solution, and the worldwide crisis is at risk. Systemic risk levels. Does a bear have a lot that they're right for, including us? Sure. But so what? Right now, there is what they call market volatility, central bankers around the world volatility. They're going to inject so that there isn't a stampede on banks in Europe and around the world. Deutsche Bank, other banks, the notes, the debt, all of it's true. However, you need to learn how to trade the upside, both side volatility. Even when people, commentaries on TV that are always bull every day, they started bear. That's right when I knew we were going to get the announcement. And as a sentiment indicator, I needed to get on the other side of his thinking. In a short-term trade. Short-term move. And getting paid on the upside volatility. And as that S&P breaks through here, it's got to have another 60-minute intraday bar to break up through these resistance levels right here in the shorter term. So this is resistance 1 and resistance 2. Right here. Resistance 3 will be somewhere right over here. That will be resistance 3. That's where it snapped its neck in that 60-minute sell bar, never looked back. And that's when you had to be short. And then you had to get out and get net long way up here above the market, just in case they were going to come out with the overdue announcement that would get them through the calendar year and re-leverage assets going into the new year of 2012. It was either that or let the system totally fail, not in the U.S., but their systems would lock up in the financial arena. And lockup means there is no liquidity. There is liquidity management. There is collateral liquidity management. There is various different types of management procedures that happen in volatile risk markets that the public and even the best of the professionals can't even keep up with it. But people in the MMT school down sure are. And the thing about it is the stakes are higher than they've ever been. Do you think those European governments want their societies stampeding their banking system? No, they don't. And the note holder had to come clean or make the people feel that there is going to be something that's going to happen in the shorter term. Now, whether they believe in it or not, we don't. There's too much debt in the world. So what? Hey, upside volatility for the trade makes money. Period. Period. In these environments only. These are extremely headline-driven volatility risk management environments, meaning both up and out of the money and down below the money. The bear is true. The bull is going to try to inject stimuluses that fell later in 2012. Who cares? I'm just giving you the upside volatility here and now. You're above that 200-minute period moving average. There will be a wall of resistance up above these trend lines. If you can break through here, you would like to break right up here around 1243, 1242. Just like you were breaking it going to the downside, that upside volatility needs to break right through there on the 60-minute chart. And, you know, the 60-minute chart goes back a ways. This was the rally tops over here on 1027 that were made the original highs. And then the contagion and the long-term daily up and down headline consolidation with elevated risk all the way. Elevated risk, which equal risk management training. Info at stockmarketfunding.com. Info at stockmarketfunding.com. The upside has to display a buy-side market from the original gap open. That's this 60-minute bar right here that you see. This 60-minute bar is very narrow range. And what does that narrow range 60-minute bar really mean? It means that people are dumbfounded right now as far as to what the headline news is doing. And it's very narrow because people don't know, well, should I sell or should I hold it or what should I do? Otherwise, you would not have that narrow range of a bar here right now on the 60-minute. And here's a good look at it. That's a 200-minute period. That's the 60-minute breakout. That's the higher high, but it's narrow. And this top bar, and the time is 7:25 a.m. We haven't even been open an hour yet. But this is the opening hourly 60-minute bar here and then this one here. You have to maintain a closing level above the shoulder of this bar right here where this is. That's got to be your support level because that would mean strength. And I'll draw a trend line right there for you. I'll be happy to. MMTs. And there it is. And that's the 200-minute period moving average on a 60-minute. Another thing that I will point out to you outside of this right here, MMTs, is that people are dumbfounded right now. People don't know, do I really want to buy into this or do I really want to sell down to this? What does matter is the strength of the move. The strength of the move, MMT. The strength of the move. What I will show you down here, MMT, is another view. The 60-minute buy signal that was building momentum here, called a MACD public indicator, has risen in value, as you can see. That's this. You want to learn more about public standard technical analysis subjects? Info at stockmarketfunding.com. Info at stockmarketfunding.com. This is a public indicator, and what the public make their decisions, how they make decisions, as they read these standard technical analysis indicators, they're all pointing up that strength on the 60-minute. However, I will get back to this now. You're going to need this bar to maintain a closing 60-minute level, and you're going to have to build off the high. You're going to have to, at very minimally, hold the half bar right there. And you're approaching the first hourly tape. This is live. It's not after the fact. We're going right through these markets here and now. And we're going right through that S&P right now. 1234.15. First hourly opening bell.